Well, dude, I was about to light a cigar because I thought Jack was on, but I guess that's Monday.
You can still
So,
smoke a cigar, pal. I'm not gonna call the cigar police.
well, I had no breakfast yet, so I'm not gonna.
Sorry to disappoint you. You'll get Jack on Monday. I'll be traveling.
Oh yeah. Where are you going again? Ooh, it's
Jacksonville,
right
Florida.
out here.
Jacksonville, Florida. Yeah.
Oh wow! What a sexy destination.
Exciting times. Yeah, I'll be in Jack's for a day, for a hot minute. But it'll be good. You guys will have a good convo. You'll have a good time. My lawnmower guys always pick the worst time to show up. So if you hear some like blowers in the background and stuff like that, I apologize in advance. But crazy morning so far already.
Yeah,
Right?
well, I saw the futures caught a slight bid off the number. What are we
Yeah.
up now?
Up 20 bips on the S&P, like 0.5% on the Nas.
Yeah, the now leading. I see your blower guy in the background.
Yeah. I got a soccer goal for my sons, and like two of them were playing penalties the other day, and I screamed at them, and I felt like that old asshole. But what are you gonna do? I gotta work.
Jen's saying, are we going to rally today now? I think what you're going to see is implied volatility get sucked out the options. So the S&P yesterday at the close was implying a 55-point move off this employment number. Obviously yesterday too, because all the volatility. So I would be very cautious, kind of like yesterday with the rally we had. Like I was looking at the market eternals yesterday. I mean, even like 30 minutes after the open, the market eternals were looking horrendous. If you look at like the tick, the ADD line,
Yeah.
we are rolling over. Maybe you could even pull it up.
Oh, I will. I'll get there. I just want to say something though. I mean, yesterday was unique in what we've been seeing in terms of selling from over a year now. We had a cracked out stock market in 2021 where people were just like, buying NFTs and doing wild things and had zero respect for risk, and there was no other option. There was no yield to be found anywhere, right? And then we had in 2022 that bubble deflate. Basically, we had crypto collapse.
Bro, crypto was 19K this morning. It was down 9%.
Right. So I'm saying so I'm just going through the timeline of I'm trying to piecemeal it for people, because yesterday was a new milestone. It was a new wrinkle, and I want to get to that. And so then we had the bubble deflate in all the risk assets and all the bullshit, right? And I like to call them crack stocks, shit stocks. You can call them whatever you want, but they got taken to the woodshed. Kathy got taken to the woodshed, 75% down in a lot of these names in a year. Whatever. That's normal life. That's natural life. But yesterday, my friends, we entered a new part of this cycle of the bear market / recession cycle.
The corrupt bank.
Financial crisis starts to happen, because guess what, kids? People have their books marked in a different place than where their actual collateral is. So to give you guys a quick example of this Silicon Valley Bank, no one gave a shit about the Silicon Valley Bank before yesterday, right? But if you look at the book of Silicon Valley Bank, they have the largest securities as collateral deposits of any bank in the United States. And they were the 18th largest bank in the United. I didn't even know this. I found this out yesterday, of course. They were the 18th largest bank in the United States by market cap before yesterday.
Wow. That's insane to think about.
So they don't have cash. They're a bank that doesn't have cash. They have shit stocks as collateral. Venture capital equity.
Yeah, they were doing all the VC stuff and basically all the companies that came out of fairy dust out of nowhere. Yeah. They were getting loans and money from them. I mean, they're Silicon Valley. It's home of the
but JP Morgan, for instance, who got also woodshedded because of knock-on effects from this. They have to meet certain capital criteria and scrutiny that SV Bank didn't have to. For some reason, they circumvented that. And I don't know why. It has something to do with the labeling of themselves as a commercial depositor versus being not a commercial deposit. But like they don't bank banks per se, you know, but to have that high an exposure of equity and call yourself a bank, incredible. So we're in a new, so I just wanted to say that now you have to recalibrate your entire risk assessment based on the fact that you can have black swan blow
Event.
up in
Yep.
credit and this and that. That's
And,
something you have to price in now.
and let alone European banks. Look at Credit Suisse. You know, that news took a back seat. Credit Suisse is a $3 stock. You
Dude,
know, it's crazy.
we know a whole lot about people, you know, businesses that are bloated and shouldn't. I don't
Oh,
want to get into that, but Credit Suisse has been a zombie. Those guys have been a zombie bank for like, you know, 4 years, 5 years.
yeah.
Zombie bank, like total apocalypse.
And did you hear now you got Jamie Dimon's got to hand over the Epstein files for JP Morgan? I mean, when times are good and money is easy and people are blowing it, everything is champagne and roses. Now the
Now we're
dark
in the body. Now we're in where the bodies are
yeah
starting to float.
body.
Now the
Where
bodies are. I always have these really crude analogies, but they're visceral and they make you understand. Now the bodies are starting to float to the surface, and they've been hidden. You know, so for the first year we've been dealing with the obvious explosion, and now we're getting the knock-on effects, the financial crisis. This bank has this credit on their books. This bank is, you know, they used SPACs as their collateral to borrow against at another big investment bank. And so when all that starts to unroll, we can get, I think it could like create like a bigger spike in volatility. But the weird part is I think that it might be like more isolated this time in financials than in
yeah,
tech. I think the actual tech, like you could short banks versus long tech on this
well,
phase of the of the experience.
and that's why we always say we don't follow the Dow. I know I don't. I don't look at the Dow.
The Dow is for like Wilford Brimley and like people from like 1982.
Yeah, if you're like an old man and you got your, the Dow. No one looks at the Dow. No professionals look at the Dow. You look at the Dow, you're like the average Sally across the street says, "Oh, the Dow's at 500," but has no idea why.
Whenever
The
like I meet someone and they're like they want to talk stocks or the market and they're like the Dow, I like walk away. I'm like, I don't know what you're talking about. I'm a private investigator. My
the
name's
Dow's gauge ever, but the Dow has the boring banks in it, right? So it's like what we said Monday. The Nasdaq, the crazy, the shit stocks, the crack stocks, the
Yep.
rope, Amazons, your Shopify's, your Kathy Woods, your Teslas. Those names, they don't give a damn what the banks are doing. You even saw that this morning when the market was down. The Nasdaq was green a little bit. Even
Yeah.
before the number.
It was strange because you had like real pain in in the SIVB. You had like that thing down like $40, $50. The financials down $10, and you had all these wild things going on, and the market was like taking it all on the chest. So let me share my screen and we can look at. I think so. I'm very cynical. You know that, Lance, right?
Oh
And
yes.
I think a lot of the big futures traders had this information on the job. So one of the things we were scrambling to get you guys juiced up about this morning and why it was so crucial for us to join us today is we had the February jobs numbers, which I'm showing you here on the screen here, came out at 8:30 this morning, right, Lance? And
Yep.
like you said, they were expecting a 55 handle move in the S&P. That's because last month in February, if you take a look at this number right here, this came in monster. Like they were expecting 200.
Yes.
They were expecting this month, and they got like this monster number here. So that day, the S&P crashed when it came out. It was a crash day last time that we had the monthly, report.
Yeah.
But this month, they were expecting 225. We got 311. Pretty strong still. But this is kind of cool information. We were looking for 3.4% unemployment. We got 3.6. So unemployment's a little bit higher, right? The actual rate. And this is the one that they can mess with the most, Lance. This is the bullshit number of bullshit numbers. So they can tweak it a little bit. They can count you as looking for a job. Maybe you weren't looking for a job before. Now you're suddenly looking for a job. Who knows? This thing should be closer to like 8% if they counted all the people that don't actually work that should be working, right? Maybe 10%. But another cool thing is this average hourly earning, 0.2% is super soft, super
Okay.
soft. So this is sticky inflation, right? This is the stuff that they need to keep raising rates to the moon, to infinity and beyond. And now maybe they don't. Now maybe they don't.
Well, that's what I think. And you had the market sell off on Powell because with the aggressive rate hikes, tried pulling it back and stuff, and you've had summer, they might slow and everything like
Yeah,
that.
right.
I mean, I wouldn't be, at least I'm not too concerned with the whole hey, we're going to pause rates, raise rates. I honestly think uh, we're getting into a recession, or we're in one.
Oh yeah.
And by the time that actually comes out, so let's say 3 months from now, we can actually say the R word, recession. Then I think the Fed actually, slows down. And then that's why I think the NASDAQ names, the shit stocks, are just going to rip to the moon.
Well, none of that shit actually matters. This matters though. This is how you get credit crisis. This is like when you have so to explain it to normal people that are not like financial people like us that think about this shit nonstop. If you think of the world, they're like, if you think of our country and then you think of the, companies, kind of like a household, and you think of household credit. When you got a bunch of cash in the bank is when everybody offers you credit cards. I can't open my mailbox without Amex. You need another Amex. Like, dude, I got all your cards. I don't want another promotion. I don't give a shit. I don't even use it. Right. I don't believe in using a lot of credit. If I can't buy it, I don't want.
For the people? Are you looking at the 2-year?
I'm looking at the 2-year. So when things get crazy, right? When you have bad credit, then interest rate, your own credit rate, when you need the money is when your credit is really bad. It's when the rates are explosively high. And so here we are in the United States. We need credit because we spend money like drunken sailors. But
hey, you got to show off. You got to look good. You got to spend money.
So that's been the stressor on stocks, right? So this morning, and the bonds always lead the stocks, we had the 2-year go from 485 down to 470. So we had a 15 basis point move, which is good. So it's like, if you need cash and you couldn't afford to borrow and you can't get credit, well, now you can afford it a little bit more. That takes a little bit of the pressure off. In the short term, it takes a little bit of the pressure off the banks, the VCs, all the bullshit. Just explaining to the people that it doesn't really crystallize for at home. So if you go a little bit longer term, like look at this rate. This rate, look at this thing. This thing was at 0 for the bonanza years. Remember the bonanza years? Let's look at Kathy. Let's look at the decline of Kathy in comparison to the free money, money.
Starts what, 2021, 2022?
Yes. So we went from like a little bit of cost of money, like 1.5% to like flat 0 with COVID, obviously. And then the crazy shit happened and people went fuck wild. And that's this blue line here. That's like to the infinity and beyond on bullshit.
That's stocks like the SPACs, the EVs, the buy now, pay never, the worst stocks, the high PE ratio stocks, the worst stocks money can buy. You start an AI company in your mom's basement, you have a $10 billion valuation.
Dude, there were delis in Jersey that were IPOing at like 100 mil. I mean, have you been to a Jersey deli? Like those dudes should not be like at a $1 million valuation.
We all heard the story. Yeah.
Right. And they were IPOing. That's the kind of crazy shit that was happening. So then we have the fastest rate increase, I think, in American history, like at least in the last 30 or 40 years, we had the fastest rate increase. And we went from 0 to 5% in a little over a year, in like 14 months. And then you saw this. So now the question that everybody's trying to wrap their minds around is this going to this or this, right? Because if you go back even farther, I mean, ARC didn't exist, but
you probably do like the Qs or something, or Apple.
Yeah, I mean, like, I don't want to look at this for too long, but I think we're kind of, if I have to guess, I think we're kind of around 5%, 6%, maybe at the max fair value for what rates are going to be for a little while. I don't think you go much higher because I know this country can't afford to keep borrowing much higher. We make the rules. Let's just leave it at that. We make the rules.
Yeah. Well, I will say this, putting money in the bank right now and keeping it there 5%, it's
Nice.
very, very attractive to a lot of people. I know it's for me.
Remember they were saying cash was trash, and now it's not. Now it's not trash.
No, because they wanted you to put cash and shit, and now your shit's on fire and it ain't coming back.
Right. Right. Yeah.
I mean,
So that's what we're talking about,
true.
right? And so I'm looking up, it's fading a little bit, right? Like this futures move is fading before the market even opens because people are still like, what do I do?
It was just like yesterday. We had a nice pop, everyone was getting long, and then here we are with a nasty sell-off. Jeff, I sold all my longs yesterday morning on the pop, and I felt I wanted a lot of names because I was like, oh, I'll do some binary events for today, and I sold when the Nasdaq was up about 0.5%. I didn't even care. I sold everything on the bid. I was like, I'm gonna chicken out. The market eternals look like shit. I sold nearly everything, or kept like a couple small positions on.
Yeah.
And I felt like it. I honestly felt like a whip, right? And then
no, that's a good feeling. That's the smart feeling. That's a sign of intelligence. Sometimes
it was selling.
That's you acting on like fear instead of ignoring it. Right.
I got some Wells Fargo puts that I sold way too early, but I closed out everything. I only lost like $400 yesterday, so I was very happy. Right. It should have been like a few K. I should have lost on a big move like that, but I felt sidestepped a lot of the pain. So now I got ammo where I could hop back in the market and put on some positions. And I'm looking at names.
You should be looking for that because I think that this, like I showed you the rates. The rates lead and stock. They're gonna probably do like one last like shakeout, maybe, or not one last. It's gonna be. I've been saying this all for a while. It's gonna be a year of fake out breakouts back and forth, but there's gonna be a point here where those crazy stocks are bid like crazy again.
Well,
they're gonna be like lock limit up again in those stocks.
I mean, we just saw it the other day. I had some Twilio calls. Stock was up like 7%. Snap was up like 10%. I had all these. I sold my, but all these shit stocks were catching a bid, and I was like, oh man, the party's on.
Yeah.
You have to use the rips, sell the rips, buy the dips selectively. Very, very selectively.
My best strategy that I offer subscribers right now is burn notice. And the reason for that is we're in a position from the close until the next day, and we're just flipping it around. We're taking advantage of we haven't opened yet today, so I don't know what that stock's going to do. Looking a little bit higher than where we bought it on the close yesterday. But I think I was like, I don't know, 4 or 5 in a row, winners, back to back to back to back.
Well, it's very
in and out. I never married to it because you never know what's going to happen next. You don't know what news story is going to come out. Well, that's the kind of style you have to have right now.
It's very hard to swing trade. I actually pull up this Brazilian stock, XP.
Okay.
It's just XP.
Is it US listed, this one?
Yeah. The Brazil stock's kind of bid the other day. So I bought this name in size 2 days ago. Like I bought it in size. Like I think I had a 200 lot or something. And they were May calls, so further outdated. But the stock ripped. It was up like 8%, and I bought the calls around 70 and started selling them around 95.
Yeah.
Then at the close, I actually got filled at $1 on some, so like 35-40%. I didn't want to hold. I didn't want to give it a chance to hold on to swing trade because this is the kind of stuff we saw like yesterday afternoon, like a rollover. So like I want to get back in Roblox. I want to get back in Snapchat. The little they don't care what the Dow's doing or what the banks are doing. Mm-hmm. But the issue is you got to think who wants to stay long or who wants to Shopify another one? Who wants to go in long into the weekend with all the bank news?
Look at this. Let's look at this for a second, right? And
there you go. That's what I was.
I'm a fan of pair trades, dude. You know that. I trade the link trades, and I'm doing a link trade presentation today. I have an energy trade for it, but put that in the chat, guys, so people can join and sign up for that. That's at 10 o'clock. I'm going to be showing people how to pair trade. But look at this XLF move. This is a financial services ETF. It's much more pronounced, obviously, in like the ones that are going OB, but just being short the banks yesterday. Look at this thing, dude. This thing went from 36. This thing had a 10% move. You always bag on it, Lance. Boring banks. Boring banks ain't so boring right now. This is
No,
rock and roll sector right
dude,
now.
I had a bid in to buy some puts at 25 cents yesterday, and they're
Yeah.
penny wide. I didn't get filled. They were like 25 by 27. At the close, those puts were 75 cents. They tripled intraday because you can still, the XLF options up until yesterday afternoon, they were still very cheap because the volatility wasn't so high. Now volatility is insane in the banks because of the blow-up by the Silicon Valley Bank. But I just don't think you're going to have people want to get long into the weekend. The market, especially banks, you may see a big squeeze and then a fade, something like that. But I think I personally just want to avoid the banks. And if I want to get long, I want to go into the shit stocks, the Snapchats, the Roblox.
That's what I'm trying to explain to you. That's what I'm trying to say to these people is you can have some puts in the XLF and you can get long some debt against it. That's not a crazy trade.
No.
That's not. You might time it a little poorly, but if everything goes wildly bad, it's going to be this XLF that falls out of bed.
Yeah.
At this point.
Or you could single out like the regional banks, KRE, Wells Fargo, obviously JP Morgan with all the Epstein stuff. I mean, there's still individual names where the options aren't that expensive that you can play too.
I think you have to look at the investment banks actually, because I think the investment banks are going to be the ones that have exposure to Silicon Valley, to all this shit, because they invest, they package, don't forget, like Goldman Sachs is the squid of the earth. They go out and they package. Let's look at Goldman. I like that one.
It actually held up decently well yesterday in the morning.
This is a stock to short. This is a stock to short, Goldman Sachs. I'm going to show you why. Look at this. Look at this chart, dude. If they break below, like, I'm going to give you guys a teachable moment here. So they rallied like crazy from their October lows. They went straight through. And this was their previous high. If they break, they already broke through that. But if they're going to break through this January low of 336, which is like looking like it could happen this morning, the next real area of support is like another 10, 15% lower.
310.
So I think investment banks have more exposure to the wild credit problems that we're having in society right now than the regional banks have a different thing. They have like the recession, the consumer slowing down, but there's acute pain in fairy tale, like, crypto, startup, app companies. Same thing's going to happen in AI, by the way.
Oh, yeah. By the way, Goldman, for all you people who actually like the Dow or trade it, if Goldman starts to break, each dollar or so, I don't know if it still is, was about each dollar move is about what, 7 points or so in the Dow.
Yeah.
So let's have Goldman go down $10. That's about 70 Dow points just shaved off right there, just because Goldman, let alone the other names. So
now their implied volatility went like wild yesterday.
Well, yeah, it's a damn bank. That's the issue. You'd have to do like a bear put spread or something like that. But
you can't tell me that this chart falls out of bed. This can't get back down here into this 280 range within a month. I think it can. Before
we go, you mentioned AI stocks. I get all the emails from all the bullshit marketing companies and other people in the industry that is all. I get in trouble because I call the people, bad names and stuff. And, some people, friends.
You're the bad guy. Like, what's your name?
But pull up AI, because all these AI or Sown or what are these AI? Just pull up AI.
All right.
That's the new thing on the block, the new cool kid.
Yeah.
But look at AI. Look at the fade yesterday. Is that a 5 minute or something?
That is a 1 minute.
I mean, look at that move, right? Pull up like a daily if you can. It's got to be. There you go. See that?
Right. Yeah.
Because everyone was chasing this name because, just like I said on the conference call, they said AI, the CEO. This is how crooked these CEOs are. He said AI so many times, and business is doing so well because the AI. that the stock caught that huge squeeze and it's given it all back, just like NVIDIA CEO said AI 75 times on the conference call. These companies aren't dumb. You know, it's like when everyone was getting into electric vehicles and all you had to say was, we're making an electric vehicle, or we're into crypto and all the crypto stocks are, remember that? A company
man. Everybody became like, everybody becomes what they want to, what they think is like the sexy premium, dude. Like the Weight Watchers play. Why did Weight Watchers go parabolic? They went parabolic because they became a pharmaceutical company or like an online doctor company for a minute, right? Like
Exactly.
they're going to give people that diet pill all of a sudden. They're going to start writing scripts online, right? Like Teladoc all of a sudden.
Yeah, don't give it. You'll get like Weight Watchers. I loved it. Made a lot, fantastic trade.
You're the Oprah trader is what they were.
Yeah.
I was reading.
But at the same time, you got to figure this is when stocks had a big short squeeze that day.
Yeah.
But then you chase these stocks, and then you realize nothing's really changed. It was just a one-day news event, and then people start getting, I don't want to say smart, but everyone gets rid of their position. So you have the big squeeze, everyone gets stopped out, and then you have the big downfall. That's going to continue to happen. Like you might get a Rivian. You might wake up tomorrow and see Rivian up 20% on a new truck, right? And then it's just going to give it all back.
I've been shorting. You asked me like 2 weeks ago, which stocks can you safely short? I'm like, these are shit. I mean, like, this is a company that could rally in your face. So you shouldn't do it all at the same time. And it's hard to short in the hole. But every time you get one of these moves back up, it's like whack-a-mole. You can smack it back down because the pressure of rates is so real for guys like this. It's so, I want everyone out there to think of it like your own personal bank. Who needs money? The people that need money are the most vulnerable. It's the same thing in society. It's the same thing in companies. It's the same thing in governments. Who needs money to eat? Who needs to use their credit card to pay their electric bill? Those are the people that are going to get taken out back. I always point back behind me. That's people taken out back in these environments.
Do you want some longs? You go into boring food stocks. You go into Dr. Pepper. You go into Coca-Cola. You go to McDonald's. Okay, maybe some energy names out there, but you go to the names.
I'll show you a stock that looked really great before everything went wild, and it looks still okay. Look at this stock, how it's holding up with yesterday. It's still it still like did all of this move. AMD is an animal. This stock is going much higher if the market just calms down a little.
You need the market. You need the NASDAQ to at least hold for AMD to move. Like it doesn't go straight up.
We might get another little bit of a flush. So we've got 2 minutes left. We've got obviously a lot going on. I'm going live at 10. Hey, Sean or whoever's watching, can you help me put this this registration to sign up for the link trade? Thank you, Sean, my man. I'm gonna show you how to trade pairs. I'm gonna show you a stock that's like looking like it's getting taken out by one of the richest people in the world. And
I know that one.
In this market, if you don't know how to have a hedged book, you're doing it wrong. You either got to short you either got to trade extremely short-term time frames like landlords do, like
daily,
or if you're gonna do a little bit longer term, you gotta have some puts against your long. You just have to. You got to protect your backside, even if it's in an index. You just have to. Or be in cash.
Hedged if you're holding overnight swing trades. The worst thing you can do right now is go buy like XLV, the boring ETFs or something, or like
the worst thing is to watch CNBC, and then if the market's up 2 days in a row and you get like these like slightly puffy dudes in really bad suits that are like over 60 that say I love this stock and they want you to chase those stocks, turn your effing television off and go play golf like I did yesterday. The worst thing you can do is chase these stocks after they've already bottomed out and run for a few days and start buying calls. You have to be there in extremely short time periods, fading moves like Lance is an amazing expert at on the long side when holding your nose when nobody wants it. All right, that's the open. I'm gonna see you all at thank you for joining us. I hope you guys got something out of this morning. I'll be there at 10 o'clock. And I think this was our most attended. I think besides the first one, we had like one of our best crowds ever, Lance. So thank everybody.
Everyone, also, just a heads up, Jeff has a webinar, attend if you can. But also, I know both of us in our Telegram channels, I'm starting to post a lot more, especially
Yeah,
marketing.
me too.
I gave a little shout out yesterday at I was like, hey guys, the market Eternals look like a Ferrari with a Kia motor because they look. Honestly, I do this by myself. No marketing people, nothing. I did 17. So
Right.
writing some stuff in our Telegram. So if you can, well, I think it's free to join, but sign up if you can. Obviously, you'll get some marketing stuff that the team people do in there, but at least you get some insights from us in the Telegram. So if you want to check it out, maybe someone can post a link for the Telegram, or just I don't know what, maybe I don't know. How else can I get the Telegram channels? I don't know.
I don't know. Sean, can you help us with that? Someone had asked me what I shot yesterday in golf. I shot a 84, whatever. Not terrible. Let's do something else. Yeah, I was back by 2:30. I played in the middle of the day. I didn't want to sit there and watch what I knew it was going to happen, the pain train. So let's get this Telegram. Oh, he's got the Jeff. There, those are the links right there. No, I'm not a 6 handicap. I'm closer to like, I vacillate between 13 and 16, but I had a good round. Whatever. Let's go. Let's go. What else we got, Lance? We got the SPY going down. Yeah, they're gonna flush it. People are afraid, but this was watch the rates. Watch the rates. 9 holes, 84. No thanks, Black Diamond. 18, you gotta, baby. 18.
You gotta figure though, this is such a light move. I don't want to say I'm bullish here, but this is such a
I'm bullish. Don't puke your longs here. Do not puke your longs. Don't sell long. Buy only. Take the sell button off. Honestly, if I had a trading, like I used to like teach, young traders and watch them. We'd have an open. I'd be like, only buying now, only buying. You have those periods of time. So, all right, y'all. Have a great day. Be there at 10 o'clock. I'm gonna show you how to do this link trade. Also gonna talk about this energy crisis, which is just like getting explosive. You're gonna have a lot of good pairs to do this year. If financials get crazy like this, I know financials have a great short you could put against them, and they're in the same space. So let's go. A little bounce here already. Yeah. So. All right, Lance. I think we're gonna have Jack as my replacement on Monday. So you might have to drive the ship. You might have to share some of this stuff because I don't know.
Well, I'll be Jack.
Cigars.
Jack got me a cigar when I was with them the other week, and I haven't smoked it yet. Now, to be fair, no one mentioned this to Jack. It's only like a $10 cigar, and I got him a $30 Atabase cigar. So we won't talk about that, but this it will.
But you just did.
I usually don't smoke cheap cigars. I'm a classy man, but
life is short, man. Life is too short for cheap
and cheap whiskey,
cigars, cheap women, and cheap shoes,
and cheap whiskey. we only like our classy ladies. Well, just married, but me, I only like my.
Never go cheap on shoes, man. Shoes matter. They matter. They affect your whole health. All right. See y'all later. Have a great day. 10 o'clock. Be at my thing at 10 o'clock. Bye-bye.
Peace.